Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day everyone. Thanks for joining us today. It's a rainy week here in Sydney, and which is good. I quite like this sort of weather. It's a good working weather, but for what I hear, there's some rain heading out west and helping our farmers out. There's a lot of farmers out in New South Wales. Pretty much all of New South Wales is in drought, so they're in some dire need of some rain. And I was watching some quite a lot on TV recently about the impact of the droughts, and obviously tried to frame that into what's happening with property values out in some of these regional areas. And it's funny how different market dynamics change property economics, and hopefully this drought won't last forever, and our farmers will get back on their feet, and a lot of the regional towns will start back into vibrancy, as well as a lot of commercial properties in the regional towns, which are empty at the moment. The reason why is that because people aren't buying stuff; they're spending their money on feed rather than trying to equip themselves with new clothes or other goods. But an interesting time in the commercial markets in these regional areas, and we'll have a bit of a closer look at it as we move forward. But today, a little bit of commercial stuff. We've got someone in the studio who is a property investor who has a good blend of resi and commercial stuff. So I really want to get an understanding. We talk a lot about residential property investment, and we touch on commercial, but I like to do a little bit more of it. So we're trying to find guests that can come in and chat on that basis. So if you're one of them, if you're investing in commercial property, make sure you connect in with our team and let us know that you're happy to come on the show. Editor at smartpropertyinvestment.com.au, and we'll hook that up. But anyway, moving right on. Penelope Valentine, property investor. How you going, Penelope? How's things?
I'm good. Thank you. And yourself?
I'm very well. Is any of your commercial stuff out in regional areas, or is it all sort of metropolitan based?
Yeah, there are some in regional. We've got some down in Bateman's Bay, Turos.
Yep.
Couple in Tasmania, in Devonport. So not too regional, but, definitely.
Still regional.
Yeah, it is a bit regional.
So you invest in both residential and commercial?
Yes.
Why sort of a foot in both camp?
I guess just to diversify a bit. I've known residential property for a long time, being in property myself. And over the last couple of years, we are a part of a fund of people who have started looking for commercial opportunities, mostly in hospitality, so caravan parks, motels, and that kind of thing.
Okay, so you're sort of clubbing together with other like-minded investors.
That's right.
Buying bigger assets than what you could possibly do. Oh, that's interesting. Let's have a chat about that. So Bateman's Bay, Turos, beautiful places. I like it down that way. Great. I go sort of surfing down there every now and then. But what do you got down there? What sort of assets?
So a caravan park down in Turos, so Turos Caravan Park.
Okay.
It's right on the headland there, and it is beautiful. And then a motel in Bateman's Bay.
Okay.
We also have a house in Kalala Beach, right on the beach. Do you know where Kalala Beach is?
No.
It's just near Jarvis Bay.
Okay.
Some of the most beautiful, whitest sand in the world.
Well, I was reading about this. There's this big global debate about who has the whitest sand in the world.
Right.
And so not Hamer's Beach. What's the big white beach in Bateman's Bay? I can't remember the name. Himes Beach, that's it. They thought they had the whitest sand in the world, but it's not. It's somewhere where you'd not think. But anyway, beautiful place nevertheless. So these commercial assets that you have down in Turos, and Turos is, for people who don't know, it's got to test my geography, about 3.5, 4 hours south of Sydney,
Very
right on
well
the coast,
done.
probably
Exactly.
halfway between here and the Victorian border. Beautiful place, sort of sleepy, really busy in the summer and during Easter during holidays, but the rest of the time it's just a nice, quaint sort of town, and very popular. So you've got the caravan park there. How many sites are on the caravan park?
You're testing my knowledge now. Well, we're actually revamping it. So we're going to redo the cabins. Two of the people that are in the conglomerate of investors with us are property developers.
Okay.
So they're going down and they're redoing all the areas and all the caravan parks, and there's cabins as well. So we're really trying to, I guess, capitalise what we've got. But there are a really hardcore following of tourist people down there.
There is.
So, they're there every year. They book it out regularly.
You can't get it. Their family's been going there for Christmas.
Can't.
And the same site. They don't get the same site.
Absolutely.
It's,
Yeah, you're very right. We couldn't get down there. We wanted to get down there last year and it was full. So it's definitely a very sleepy town in the winter, but it comes alive, as you said, with these.
It really hustles. It's good. It's a really nice family holiday location.
Very much.
So the syndicate, I guess you can call it that, of people who have pulled together to invest and acquire a caravan park down there. How many people are in that sort of syndicate?
There's 5 couples.
Okay, 5 couples. And are they mates of yours?
Yeah, we know each other through industry.
Okay.
My husband's also in property as well. So he does a lot of work. He does marketing for them. So he knows them as well. So we've all kind of got together and we've become friends as well.
Okay, that's cool. And does the relationship work? How have you structured it so you can, because I like the idea of a lot of people are doing this, they're sort of syndicating and investing together to buy bigger assets, but what mechanisms do you have to make sure that you can deal with differences of opinions and all this sort of stuff?
We're all really like-minded.
Okay.
It sounds a bit like the Brady Bunch, but everybody knows what they have to do and we just get on and do it. And look, this is an investment, so it's about the numbers. There's no emotion around what we're doing. It's about making sure that we create the best investment that we can and that the yield is there and that the capital growth is there.
Yeah.
So the capital expenditure now is all agreed. We know what we're doing. We know what we want to come out of it. We've got an exit plan. So it's all very well documented and everyone's in alignment.
Yeah. And is it equal shares pretty much?
No.
Okay, so it sort of fluctuates depending on the initial investment.
That's right.
Is there any debt against it, or is it?
Yes.
Is it okay? All right. So I guess the message there for people who are looking at these things, you need to document this stuff pretty well. If
Absolutely.
there is debt against it, and you have exit plans. If one couple, for example, in your case, wants to exit the partnership, what happens? And it's because the intent is good for a lot of people. I think sometimes they get it wrong. How are you making that work for you guys? Is it just really good, open, transparent communication?
Yeah, absolutely. And there's reporting. So there's obviously quarterly reporting, annually reporting on how each of the entities are going financially and what the plans are moving forward, making sure that the growth that was projected is in line with what's actually happening. So, and we're quite passive. My husband and I are quite passive in most of these investments. It's more around being guided by those that someone goes out and finds the opportunities and then other people will go and do some capital works on them. So everybody kind of plays to their strengths in this.
Yeah.
But you're so right. If this is not something that you do regularly, you definitely need to seek the help of a professional to make sure that it's all documented and everyone's very, very clear on what the outcomes are.
Who's responsible for running the asset? Do you have a general manager in the caravan park who reports back to you on performance? Is that how it works? Okay.
It's actually the same person that was there. We tried to keep all of the team that was in place. So when we purchase these commercial enterprises or companies, we try and keep the team as much as possible. And then if they need extra support, we can go in and help them as well. So if the business wasn't running very well, we can actually offer them some help in business development and growth and give them some ideas on how they can actually grow that business better.
So this is important. You're actually referring to this as a business. It's not really an investment, but it's one of the same, isn't it? Because you're buying the business. The business happens to be a block of land that people park their caravans or tents on, right? So what's the play for you? Is it a capital growth play or is it more of a yield play? So are you looking to park your money in something which is going to give you a good return, or are you looking to park your money in something that at a point in time when you exit you get paid?
Both.
Okay.
So I know there's that old the old adage is, what do you look for? Do you look for yield or capital growth? And generally in residential, you're looking at about 4% yield, and then you've got the capital growth, and the longer you're in the game, then hopefully more capital growth. But with these commercial enterprises, we're looking at around 17, 19% yield, plus we get the capital growth as well. So it's to our benefit to make sure that these companies are running as effectively and as efficiently as possible, and where we can help, we do. But we do have the exit plan to get out within a certain stage as well.
Oh, and what's that length of time for an exit? 5
years.
Okay. And you just hope in 5 years' time that the property's worth a lot more money than what it was.
That's the idea.
That's the idea.
Game. Yeah. I guess.
And who would you, because I know caravan parks are quite popular investments these days for larger sort of corporates looking for new assets. So are you spending a lot of money on capital works improvements within the caravan park to help lift its value, or you're hoping that the market is going to do the heavy lifting in increasing the value of the property?
A bit of both.
Yeah.
We definitely want to increase the value of the property. So just redoing the toilet and the shower blocks and adding in new parks and equipment and green space areas for them to play. But I have to say, I've only just started camping the last few years. I was never a camper, but they've really lifted their game. I remember when I was little going camping, and it was pretty much, a log that you would kind of jump on, and that was it as a play area. But in terms of what the facilities are for children now and for campers as well, it's quite luxury. So you really have to provide a great, I guess, a great experience in camping areas now.
And you feel as though you're going to create or evolve a product that is going to be attractive to another investor. Do you know who the next person would be that would invest in something like this? Is it one of these big corporates? You just wait
We'll just wait and see.
At that point in time. It's interesting stuff. And your place in, you said you've got a hotel in Bateman's Bay?
It's a motel.
A motel.
Yeah.
Tell us a little bit about it. I'm visualising like a blue 3-story type.
Have you been there?
No.
That's what it's like. It's a motel. It's a motel. So again, we offer advice on how they could potentially run the business a bit more effectively, maybe different operations ways and how they can, make it more profitable. And then we do more capital works on there. So just refurnishing the rooms, doing some small minor upgrades to, I guess, improve the business overall.
Okay. And with the caravan park and also the motel, motel is where you drive your car in and park it.
Yes.
Okay, cool. The capital upgrades that you're doing on these assets, we'll call them assets, that's what they are you financing that through positive cash flow in the businesses, or are you guys tipping in more cash personally in order to do it?
So that was already agreed. So when we basically all put our money in, it was already agreed the capital works what we were going to do. So the funds are already there. Okay.
That's good. And what other commercial stuff do you have then? So that's, I guess they're commercial, they're hospitality / accommodation based stuff, but what else do you have?
So another caravan park down in Tasmania, and we've just invested in a 7-Eleven and Hungry Jack's up in North Queensland. So there's some roadworks that are changing around there, and it's going to be right on the main road where there's some other developments there. So that's a 5-year plan as well, and that's with a fund.
Okay. And Hungry Jack's, 7-Eleven, good tenants have they got? Yes. And imagine when you're looking at commercial properties, it's very different from residential. You're talking about long-term leases and having marquee tenants and all this sort of stuff. So obviously having a Hungry Jack's or even a McDonald's or a Kentucky Fried Chicken or whatever it is, or Subway, if they choose a location, they typically like to stay there, right? So I imagine you've got long-term leases on this sort of stuff.
Yeah, absolutely. And that's in the information memorandum. That's all kind of outlaid for you. So you have to do your due diligence on these. And it's like residential. You can't go into a commercial venture with any sound knowledge that you are going to make money. You have to do a lot of research around this. You've got to ask all the questions to make you feel comfortable. And you have to know how risk averse are you. So I think understanding people's risk profile is really important. And, you have to take a little bit of risk in any investment that you make, but you also need to research thoroughly what the outcomes are and know what the pitfalls are, because there's always an opportunity where something may go wrong and you may end up losing money. So it's important to do as much research as possible.
And how do you hold these commercial assets? You said your husband also works within property, so investments in caravan parks or motels.
It's also our self-managed super fund.
It's all in your self-managed super fund. Okay, so it all sits within. You've got one fund that holds these assets.
That's right.
Okay, and the objective of holding your super fund. What's the rationale behind that? I imagine you got some pretty good financial advice around it, but
yeah, we did.
What's the purpose?
Well, I guess we looked at our super, and it wasn't performing as well as we thought it could. And we know real estate. We've both been in real estate. We met at McGrath 15 years ago. So real estate is in our blood now. And we thought that we'd have a better opportunity of really leveraging more super if we could manage it ourselves. And then these commercial opportunities became available to us, and it just gave us more control, I guess, on our super and our financial future as well.
And are you still tipping money into your super fund so you can continue to make investments like this? Is that the idea?
Yes.
And it's positive, the super fund, so it's not really costing you much to hold every year?
No.
Okay, so it's paying back into it, like as in? Okay, that's a good thing.
Yeah, it is a good thing. Yep.
And the residential stuff that you have, is it sit within your super fund or is it outside of super?
No. So we purchased most of the residential stuff over the last 10 years, and then over the last 5 years we've really looked at self-managed super fund and how we can grow that, and that's when the commercial opportunities came around as well. So they've only been recently in the last 5 years.
And how do you manage your self-managed super fund? Do you do that, or does your husband do that, or you just leave it all with the accountant to sort it out?
I do it with the accountant.
Okay. So I imagine it requires quite a lot of work, right? It's not really passive in many ways, because you need to be understanding the dynamics of these businesses and whether they're performing and giving back the returns that you want it to be. How do you find the compliance of running a super fund? Because it is a bit of a headache.
I actually don't find it that hard. And my husband does help as well, and we've got an accountant that's very thorough. Like you need to be, I think with all investments, you need to be involved. You can't just have an investment and passively leave it, especially one where you've got commercial enterprises, but it's residential as well. You still need to be slightly engaged in the process. It's just something that has to be done. And I like this detail and I love property. So it's almost like a hobby for me as well. It's not something that I ever think I don't want to do. I really enjoy the process and I love seeing, the assets grow and thinking about what else could we do to make this even better. So it's enjoyable. I really do.
You speak to a lot of passionate property investors and they say they love property. But what does that mean, like to you? Why do you love property?
Because I get it. It makes sense to me. It's easy is the wrong word. It's just so enjoyable. I enjoy the whole process of looking for an opportunity, finding a great property, negotiating the purchase of it, having it managed, seeing, great tenants move in there and enjoy living there. The whole thing is such, it makes sense to me and I enjoy that whole process. And obviously we're making money from it as well. And that's, let's be honest.
Well, that was going to ask, because a lot of, and myself included, I like the competitiveness of property. The fact that you've spoken about the process there. So finding a good place, making sure it's right, under market value, getting a good tenancy, etc. But you do that because there's an outcome, and the outcome is that you can create wealth through property. So I like the idea of investing in property that you can do it well. And that's what I like about property. That's what I love about property. Looking at soft furnishings on to decorate something. I don't particularly like that part of property, right? But you live and breathe property. You have a property management business, and I'll touch on that quickly. I want some tips from you. Have you always loved property, or is your love affair of property keep evolving over time?
After uni, I went and lived in London and I worked in hospitality and I loved hospitality. I loved meeting people and travelling the world. And then as soon as I came back to Sydney, I got straight into real estate. And real estate and hospitality are quite similar. You're there to serve, you're meeting people, you've got to love the service industry. And ever since we bought our first investment property and over the last 15 years we've built our portfolio, we've always had positive experiences. And I think that's mainly to do with the fact that both my husband and I are in property. I think if we'd had one of the millions of horrific experiences I've heard when speaking to investors, I may have a different view, but it's always been really positive. We've always had great outcomes and we've made not a significantly huge, like we can't retire tomorrow, but we've made some good money through investments. And so that's always left a positive outcome for us.
And what's the game plan then? You can't retire tomorrow, but...
No, I'd like to retire in 10 years.
Is that the idea?
Absolutely.
Have you got that like as a formal plan, or is it just in the back of your head that's what you'd like to do?
It's a pretty formal plan.
Okay.
As everything goes, who knows what happens with life? I think every day you've got to wake up and be grateful you can jump out of bed.
Yeah.
But the plan is, that we retire in 10 years and we travel the world. We've got to exit the kids from the house. We've got 3 and I think the average age of a kid to stay in your house now is 26. So we're going to have to get rid of them because our youngest is 7.
Okay.
But get rid of the kids and then, enjoy life.
So what does retirement mean for you though?
Financial freedom. It means being able to make choices about what we want to do without having to think of the burden of, okay, how are we going to fund this? It also means preparing our children. So the moment they've each got a property, they know their property, what it is, and we try and get them involved in that. And giving them that leg up because it is harder than ever for the next generation to get on the property ladder.
So you're essentially going to gift them, I say inverted commas, a property unencumbered.
Yes.
Okay. Are you going to have any rules around what they can do with it? They can't flog it tomorrow and go travelling through Europe, or if that's what they want to do, they can do it.
Depends what their personality is. I think our middle child, Max, will probably want to flog it and fly first class around the world. But no, there will be some parameters around what they can do. Their brains aren't fully developed, right? So they can't make any decisions.
So how you said your youngest is 7. How old are your other kids?
7, 9 and 13.
Okay. How do you, because I think I got young girls and we already started down this path, but how do you cultivate a conversation around talking about money and awareness around money and education around money? Is that something which is, are you chatting around at your dinner table?
Absolutely.
Yeah.
Absolutely.
How do you introduce that?
So we spoke even years ago, we would talk about, what mummy and daddy are doing and why we go to work every day. We've both always worked. And my youngest children said, why can't you, come to the canteen more and be a stay-at-home mum? And we've always had that very clear narrative on we work because we want to create a lifestyle for you guys and we want to be able to provide for you and you love going on holidays. If you want, a house when you get older, this is what you have to do. They have savings plans as well. We're really clear on they can have pocket money, but they have to save some, and trying to stop that instant gratification that our kids are so used to at the moment. So it's all around saving money and getting something that's got more value and more meaning for you. With our oldest now, we're talking about getting a car. So he started a roofing job, he has to get some money and then we'll match it. It's not a new theory, but it's something to help them really think about money and about the value of money. It doesn't grow on trees and it's not something that they just get. They have to work hard for it.
Yeah. And I think a lot of the challenges people who find themselves in debt today is that they don't get the education they need around money early on. I think it's inherent for parents to teach that.
Absolutely.
Right. You can't outsource that stuff to the schools.
Well, the schools don't teach it.
No.
So you have to. And you're right. It's such a big responsibility for parents to do that. And it's so important. It should be part of the curriculum.
Yeah. Yeah, it should be. But it's not. But, I'm sure our representatives down in Canberra are looking at this issue. But back to property. So residential stuff. So let's have a chat about that. Where are the properties? So some of them are owned by essentially your kids, sort of, or is that
they will
different?
be?
They will be.
They're owned by us at the moment.
Okay.
So we've got a duplex up in Pridgeon Springs. So my youngest two, we call them the terrorists. Those two, they're only 15 months apart. They've got one of the.
Whereabouts is it?
Pridgeon Springs.
I don't even know where that is.
Oh, it's in the Sunshine Coast.
Oh, okay. Yep. Is that right on the water, or is it sort of inland a bit?
No, it's in an estate.
Okay.
It's called Pridgeon Springs in the estate.
Okay, so it's a duplex. So
duplex.
3 bedrooms.
Three, 2 and 2.
Okay, so pretty stock standard stuff.
Yep.
Did you build them?
Yes, we did. Yeah, that was the first time we bought land and built, and it was a very easy process. I was very impressed with how easy that was. We've got a property in Surrey Hills, which we've had for years. We actually lived there. Miss Surrey Hills. I loved it.
That must be the crown jewels of the portfolio.
It is. It is. Yeah, so we've done
Whereabouts in Surrey Hills is it?
It's on Corbin Street.
Okay. Yeah,
So
I lived in Surrey Hills for about a year. It's quite good fun.
I think everyone's got to live in Surrey Hills.
In my mid-20s, which is the right time to live there. Yeah.
Absolutely. We were there as well. Yeah. You could just walk home from any party. It was great.
Yeah, that's cool.
It's
good that you heard. So was that your first home, really?
Yes.
Okay.
Yeah, that was when we had our first baby, but it wasn't so great having a small child in Surrey Hills.
It's changed so much, though. It's gentrified considerably since I was there, sort of 2000s, early 2000s, I think. But what did you pay for that place?
$475.
And today, what's it worth?
About 1.27.
Okay, that's not bad.
It's pretty good.
Can't complain. Okay, so you're still holding on to that, and you're just renting it out now.
Yeah. So our eldest will get that one.
Okay.
So he's pretty happy with that.
I'm sure he'll move into that. For a period of time.
He's supposed to go to uni and live in there, but we'll see how that goes.
Yeah, all right.
That's the bribe anyway.
Yeah.
And Kalala Beach, I think I mentioned.
Okay. Is that a holiday house or is it, okay. Do you sort of stays it or Airbnb it or, okay. How does that work? Is that sort of.
Look, it's good now, but when the legislation change comes in, it may not be so good. We'll have to think of another way around that. Because I think we're only allowed 180 days in a calendar year.
To actually have someone in there.
With Airbnb, yes.
Yeah.
I just need to check because I think it's more around the metro area, so Kalala Beach may be exempt from that.
So is it on the water or is it near the water? I imagine everywhere's near the water.
Yeah, it's just back from the water. It's
okay.
Maybe a 1 minute walk.
Okay. And is it like a...
It's just a 3-bedroom house, but there's a lot around there. So that Kalala Beach is very touristy. So there's a lot of stays and Airbnbs around there.
So is it competitive? Like if you want to rent it out, do you always get someone in there?
Pretty much, yeah.
Okay. And sort of where does it sit in terms of, I imagine there's beachfront stuff which you're paying $1,000 a night for to good old-fashioned beach shacks. So where does it sit in the...
It's about mid-level.
In the mid-level?
Yeah.
Okay. So you can always get someone in. What do you charge a night down there?
It depends on the seasons, but, anywhere from $500 to $600 a night.
Okay. Is it sort of wipe its own face, I guess is the term? Is it pay for itself or are you making money off it?
Yeah, they pay for themselves.
Okay. Yeah. I think a lot of people like the idea of having a holiday house, but never really get. Do you get down there yourself a lot?
Yes. Well, I'm one of 4 kids.
Okay.
And my mum as well. So, yeah, we do. We use it when we can.
You mix it up. That's cool.
Yeah.
That's good. Now, I'll touch on it really briefly. So you've worked in property for a number of years. I can't remember exactly where it was. You started at McGrath, did you?
Yes.
Okay. What were you, an agent? Were you a property manager?
No. So I've never been a selling agent. I've been a property manager for many years and I've managed agencies as a general manager but never sold. So I think my title was head of communications, agent communications manager.
Okay.
And basically it was to keep the sales agents on the straight and narrow. So
that's a pretty hard thing to do.
It was a really tough call.
They're good agents are wired a particular way.
Yes, they are.
And
they're very set in their ways.
They are very set in their ways. And I often have quite big egos, which is a good thing, which
Yep.
often makes them a good agent.
Absolutely.
But trying to finesse that is what if you had to say the best agents in Australia have what quality, what would they be?
I think they have resilience.
Okay.
And I think they have discipline. And I think and they're great people. So I worked with a lot of those amazing agents back then at McGrath who are just
And there
kicking
still
so
is,
many goals.
there's some really good agents at McGrath. There's always been a great breeding ground for really good agents.
Absolutely,
as well.
because John is just so meticulous and he's such an incredible mentor for these people. And, you can't help but learn from him and his passion, and he's very direct, so he doesn't mince his words, so you know exactly where you stand.
It's okay.
Absolutely. But, you learn very quickly, what you do and what you don't do to be an amazing agent. And he's very good at identifying, I guess, who he thinks is going to be really, really good at what they do and who he wants to give his time to. But, some of the people I worked with back then are, some of the top agents in Australia today.
Yeah. So fast forward, I think 15 years, I think you said.
That's right.
So you have a business called Property Alchemy, which is I would say traditional, but I don't know if they exist anymore, property management business. So you manage people's assets.
Basically, yes.
Whereabouts are you located? Which
We've got 2 locations, one on the Northern Beaches and one up in Barara.
Okay, so Barara is like top of the North Shore.
Yeah, that's right.
Yeah, and whereabouts in Northern Beaches are you?
DY.
Okay. Did you manage in those areas all over the joint?
No, we manage all over the place. So we've got portfolios in the inner west and the eastern suburbs and mainly North Shore and then up as far as Newcastle.
Okay, so considering the current market, it's a market which is evolving at the moment. There's quite a lot of softening of real estate, not a lot, but in Sydney and Melbourne where you probably have your assets, which obviously changes the dynamics of renting property. For a lot of our listeners are sort of sitting there thinking, what does all this mean to me? Our rent's going to go down, rent's going to go up, what's going to happen? What are you seeing at the moment? Is it pretty much business as usual?
Look, I think there's so much hype in the media, but the media need hype to sell the media, right?
Yeah.
And we're just going through a cycle, and this happens every year. I don't know whether people remember, but these cycles happen. It's business as usual. Properties may take a week longer to lease, but there's things you can do to lease a property. It's not just all about dropping the rent. It's price, presentation, and positioning. So we're finding that we can always find great tenants. It's just about making sure you listen to what's going on in the market and you react quickly. You can't just keep doing the same thing and expecting a different result. So you have to be proactive. And you have to have a great database. You've got to do a bit more hustle, but that's what this game's about. Yeah.
And for people who are considering either moving to getting their property managed or shifting property managers, what's the one thing you should be looking for in a property manager to see whether or not they're going to work for you?
I think what's really important is understanding who is going to manage your property. So a lot of people just go to an agency and they get given a property manager. They don't know if that property manager just started their career a couple of months ago, or if they're on their way out, or they're aspiring to actually be a sales agent, or if they've been trained properly. So I would expect an interview with that property manager and understand how they operate and make sure you get on with them, because it's a relationship you're going to have with this person.
Yeah. I've got some property managers that look after we've got a number of different property managers that look after our portfolio because we're across different states, and I think of one or two of them in particular. I just go, I just probably wouldn't like this person if I ever met them. I just know. But anyway.
The other thing is in property management, and I'm sure people have talked about this before, the average tenure is 18 months. So if you start building a relationship with a property manager and they know everything about one of your properties and then they leave and then you get someone new come in, you have to educate this person again on what's happening with your property, what happened with the last tenant. And it's a lot of work for an investor. So when you choose to give your investment property to an agency or a property manager, understand who's going to be communicating with you and how do they operate, what do they do differently.
It's good counsel, Penelope. We've covered a lot of ground here.
It's been great.
In this last half an hour. Education, children and money, really important. Your situation in terms of investing in commercial property and your super fund in syndicates, I think a lot of people will find that quite interesting. I wouldn't say it's for the faint-hearted though. I think you've got a bit of scar tissue. You've been around a little while in property markets and you've seen quite a lot. Whether or not I would be recommending people do that if it's their first investment, I'm not too sure. What would you say about that?
Probably not. I think if you can just, cut your teeth on a residential property, and then first of all, you have to make the decision to manage your own super fund. Then once you do that, you've really got to understand what you're getting into with property. But as I said earlier, you've really got to research, and get a professional. If you're unsure, seek the services of a professional.
Absolutely. I agree with that. And back in the conversation, we touched on property management. And I think this is key because your property manager is critical to managing your assets and making sure it performs in the best way. And they're pretty close to what's happening with your property. So lean on your property managers to deliver the service that you need. But Penelope, I've really enjoyed the chat. I'll have to get you back in, and when you sort of get another cover, you've got these caravan park down in Tasmania, which we didn't even really touch on. But that's have you been there?
No, I haven't.
Okay. Is that where is it in Tasmania?
Devonport.
Okay. All right. That's probably a nice place for a holiday.
I know, that's where we'll be going next. I told my husband.
Sounds really good. But keep in touch. Let us know what you're up to and
thanks so much for having me.
Oh no, thank you. It's our pleasure. If you're not yet checking out Smart Property Investment, go and have a look. We've just done a really big site relaunch. There's lots of really cool stuff in there, including our portfolio under the Our Portfolio section. Go and check it out, smartpropertyinvestment.com.au. We also have our morning newsletter, so you're the first to know what's going on in property and property investment. That's subscribe, smartpropertyinvestment.com.au for subscribe. And as I mentioned at the top end of this podcast, come and have a chat with us if you want to come on the show. Whether you've got no properties, one property, 50 properties, or you're investing commercial, or if you've got a particular story that you'd like to share with our community of property investors, we'd love to hear from you, editor at smartpropertyinvestment.com.au. And last thing, I don't ask very often, but if you like what we're doing here, please leave a review wherever you listen to this. It's just not me here standing behind the microphone gibbering away. There's a big team of really passionate people here who put this thing together, and they like to get the feedback. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.